Welcome to Invest Smartly Hub, the channel that simplifies the markets and brings you clear, actionable insights. Today we discuss a critical and urgent topic, the expected rise in gold prices in the coming days, with projections suggesting that gold may surge toward the level of $4,500 per ounce. What is driving this momentum, and why are investors worldwide rushing toward safe haven assets? Let's break it down clearly. The first and most powerful factor behind gold's rise is the combination of economic weakness and monetary easing expectations. Recent global indicators show slowing growth, weaker manufacturing activity, and rising concerns about recession risks. These conditions increase the likelihood of interest rate cuts by major central banks, and whenever interest rates move lower, the attractiveness of holding gold increases. Investors no longer fear the opportunity cost of holding a zero-yield asset. At the same time, economic uncertainty has fueled strong demand from hedge funds, institutional investors, and individuals seeking stability. The second major factor is geopolitical tension in East Asia. Rising friction between China and Taiwan, and renewed strategic tension between China and Japan, are creating global uncertainty. Any escalation in these regions, whether military, economic, or technological, could disrupt global supply chains and accelerate investor movement towards safe haven assets. Gold is historically the first destination during geopolitical shocks. Additionally, signs of economic stress in multiple countries, including warnings of potential financial instability and currency devaluation in certain emerging markets, have further strengthened gold's appeal. These pressures are creating a wave of safe haven demand that could intensify quickly if events escalate. Why $4,500? This level becomes realistic if three factors align: continued weakening of economic data in major economies, increased gold purchases by central banks diversifying reserves away from the dollar, and a sudden escalation in East Asian tensions. Even a minor conflict, trade blockade, or major cyber incident could send gold sharply higher within a short time window. Still, gold remains volatile. Strong economic data or sudden diplomatic breakthroughs could temporarily cool the market. For ordinary investors, this moment requires smart decision-making. Gold is a strong tool for long-term hedging against inflation, currency decline, and geopolitical uncertainty, but timing is important. If you plan to position for a rise toward $4,500, use risk management strategies such as stop-loss levels and limit your exposure to a comfortable percentage of your portfolio. For long-term investors, gradual buying may be wiser than entering the market with a single large purchase during periods of volatility. Meanwhile, the sustained increase in gold purchases by central banks worldwide remains a long-term bullish factor, providing steady underlying support for gold prices. In conclusion, what we see today is the perfect storm: weakening global economies, geopolitical tension in East Asia between China, Taiwan, and Japan, and increasing demand for safe haven assets. These combined forces could push gold toward the $4,500 mark in the coming days if escalation accelerates, but investors must remain cautious and informed. Thank you for watching Invest Smartly Hub. Don't forget to like, subscribe, and activate notifications so you never miss the latest updates on gold, markets, and global financial trends. Stay smart, stay prepared, and invest wisely.